Hey, can you guys hear me? Good morning. It's Friday rebalance day. Oh, same old, good allergies, pretty normal. Allergies for days. I don't know why Rigetti's up, but I'm willing to leverage up to short it. So that's what I'm doing right now. Leveraging always goes right? Never goes wrong. I've never seen one case where it backfired. Especially when you use a lot of it. It's intelligent leverage. It's a MicroStrategy leverage. What's happening with UBS? It's the strategy way. I don't buy puts, man. I really don't buy puts. Uh, yeah, you're better off if you don't use options, just in general. Just short the stock. The more you constrain yourself to profit, it's like, okay, it's hard enough to get the stock to go down and you make money. But now it's like, no, I need it to go down by this much by this date. It's like, okay, why are you making this 100 times harder for yourself? I want to make more money. I'm broke. I need 100x, and then even then, I'm still in debt. Come on, man. Don't do that. Don't do that. I'm a chud. When I worked for a big hedge fund, we never used options. It's like, what's the point? You can express your opinion with stock. It's all delta in the end, baby. If you want to give your money away to Jane Street, no problem. Only made 10 billion last year. Throw in your 2 cents, please. Renaissance only made 10 billion as well. Just keep throwing your money away. Two Sigma will take it, Citadel will take it. It's absolutely. I'm shorting INQ, shorting Rigetti. Yeah, SBF's just bad at chess. Like that was the real problem there. Is that like this guy has always had this Dunning-Kruger problem. Massive Dunning-Kruger problem. I don't know what it is that he's good at, but like he's bad at chess. He's bad at League of Legends. He said that reading books was a waste of time. This is a really, really interesting take. That's like nobody's ever said that. Um, and now, of course, he's reading books. And I don't know, dude. Like, look to like a weak chess player. You know, he's basically like, oh, I'm 1400. I think I'm great. And then he loses to somebody who's 1200. And he's like, oh my god, they're really good. uh, Honestly, so like, I'm gonna say this is terrible. What I'm about to say. I grew up in like kind of a rough household where my parents were very physically disciplined, disciplining everybody, including each other. It wasn't happy. It wasn't a happy place. Okay, but let me tell you something. It taught me a lot. And SBF, I think growing up he could have used a fucking smacker too. I hate to say it. The Albanian way of being brought up might have done him a little good. Exactly, Shake. Listen, we're gonna make you a man, all right? Come here. That's a terrible way to do things. It's terrible, but I never would advocate for that. It made me give me a lot of anxiety. Made me very, you know, probably added a whole bunch of different elements to my life that I didn't like. But you know, you don't want to have your kid end up thinking he's the hottest shit in the world because he knows how to move. You know, he knows three openings and two tactics lessons. Are you fucking Magnus Carlsen now? This is a participation trophy era of America. When I grew up, oh man, I'll never forget this one thing. I was in the library, right? And you know, I grew up in this in sort of this weird nexus of Brooklyn between Flatbush, which was the black neighborhood, Midwood, which was a Jewish and Russian neighborhood, and basically, I would go to this library a lot. I mean, a lot. It's a good library actually, and there'd be a lot of like Orthodox Hasidic kids there, and I checked out a stack of books, and I must have. I was, you know, little kid. I was probably 4 feet tall. I had a big stack of 10, 12 books, and the kid next to me is with this Hasidic mom. You know, they have their ceremonial dress. I think the kid's got his little curls. He's got his yarmulke, and he's got like his books too. And my mom says his pile is bigger than yours. Get some more books. You know, my mom, of course, you know, graduated, you know, third grade, but still knows enough to, you know, have to give you that competitive spirit. Yeah, they're all misleading a little bit, Andreas. Qbit is particularly scammy, though. I mean, that's the company is the real. Its origin story is very odd. Anyway, the point of the story is you're supposed to reward real achievements, and you're supposed to look down on disappointments, but you're also supposed to provide encouragement, but not too much encouragement. So if you end up in a situation where you reward achievements and you reward failures, and you're never disappointed, I don't know how he was brought up, but that much Dunning-Kruger only can come from sociopathy, extreme autism. I don't know. It's just bizarre. Exactly, nobody. That's the Asian. You'll never find Asian with Dunning-Kruger. Ever. That's the Asian strat. The Asian father meme. You go to spelling bee? Why spelling A? Why not spelling A? You're 5 years old? When Reed's daughter's transcript gets mad at her for getting an F in gender. How you get F? How you get F? Now that you have the Harvard degree, you can go play with your friends in the NBA. That's the Jeremy Lin, right? Thank you, Father. All I want for you is to be happy. And the doctor. You're allergic to bees? Oh, good. You'll never get a bee. Daylight saving times, extra hour for homework. Your mother gave birth through C-section. You disappoint me from the start. Blood type A minus. What the fuck? Yeah, I can do a better Chinese accent. I'm just playing around. But I think point is that, what is my point? Dunning-Kruger comes from I think a place of just being told you're special all the time. It's not healthy. Yeah, a lot of Dunning-Kruger, and that's I think it's it's not like one of the worst things you could have. I mean, it's not that big a deal, but it is super embarrassing. Let me see here. This is so weird. I typed Sam Bankman-Fried, Sam Bankman UCSF, and it made up his Google completely made up his background. He never went to UCSF. First of all, UCSF is a grad school. It's fucking crazy. I typed Duke. Oh, wow. Oh, poor Google. Bachelor's degree in physics. How great is that? Fucking AI, man. gonna try to roll this $10 million portfolio and also try to do work at the same time. It's not gonna be easy. Let's see. Best way. Okay, try this. My allergies are just disastrous. It's just, I'm only saying it because it's just a lot of BS to roll over. No, I've said a million times, I'm not touching our Venus. There's no data to analyze. You can't even tell if it's going to work or not. Nobody knows. How can you tell? There's absolutely no way to figure that out, I think. Yeah, the IVs are coming down nicely, which is nice. I don't do puts. I bought some puts, but they didn't really work. I mean, when you buy premium, you know, you really need a miracle for it to work out. When you say you heard something, like unless you're in the geopolitical sphere, you didn't hear it, you read it somewhere online, right? Unless you're friends with some ambassadors or some spies. You could tell us, I read it on 4chan, or I wish I was locking in profits. Come on. Retti is like a biotech company. They don't make money. They hope to make money someday. And again, there's nothing really fundamentally wrong with that business model. It's just different. Trump gives a speech every day. I'm not gonna watch him. Love the guy, but gotta live my life. You know what I mean? Trying to live my life. Skrelly, I'm gonna do Skrelly. I'm gonna do Skrelly stuff. Proper Skrelly stuff. Rigetti's down from 20 to 9. I mean, I don't call baggies. I think the ideal way to do this kind of thing, which everybody, including me, fucked up, It's easy to say after the fact, right? But I say this all the time, is that if you're shorting a stock that's sort of doing this, and you are here, or maybe you are here, the best way to do it is to do a negative 1% position. Why? You might say, Martin, that's too low. I'm not going to make any money if I have a negative 1% position, am I? Wrong. Absolutely wrong. Because if this stock goes down right away, right? So the bubble is over. This was the bubble. We zoom in and we say, this is the bubble. And this is what happens. It just drops right away. Well, guess what? You make 1% or whatever, 50 basis points. But let's say you make 70 basis points. Now you say, I'm not going to get rich at 70 basis points, right? That's not right, because you made that in a week. 70 basis points in a week is 1.007 to the 52nd power. That's a lot. That's 44% a year. Pretty good. Okay. Let's say the thing goes up quite a bit on you and you're pissed. Well, at this price, your 1% short is now a 2% short. But let's say you double it up. Say it's 4% short now. All right. And in a new scenario, it also tumbles and drops a bunch. Well, remember, you are down 1% already on your short. So you're going to recover that, but you're going to make, well, I guess you could just say, how much does it go down? Say it goes down to, I guess you would make, who knows the number? It's a little tricky because it went from negative 1%. So let's say it was $50,000. Then you lost 50K because it was 100K here, but then you double down with another 100K. Let's argue. And this goes down 70%. So you make 70K on this. And this goes down 70%. So you make 70K on this, but you were down 50K on this. You really only make 20K on this. So, okay, so you make, let's say, 50%. Okay, so you make 50%, which is great, obviously, on a trade. So you're up 2% in this case on your whole portfolio. And let's say that took a month. Well, 1.02 to the 12th power is also a very good return. That's 27%. Okay, you know, these are just examples. You can. So let's say this really crushes you. It goes up to negative 8% or something. So now you were down, well, this 50K is doubled twice. So this is 200K, and you're down 150K on this one. And this 100K has gone up to 200K, and you're down 100K on this one. You're getting close to your maximum pain. But you say, I'm going to add another, I'm going to keep shorting it. I'm going to add another 4%, which is another 200K. So I'm going to grow my position to negative 12%. Remember, the short is growing without you. This is month 2. And, you know, you time it, eventually the stock's going to drop, right? So here you time it well, and you make 75% again. So 75% of the down is this 150, this 200K goes down to 50K. So you break even on this guy. This 200K partial investment goes down to 50K. So you're up 50K on this guy. 50K is 1% in our world here. And then the 200K you shorted here does really well. So you're up 2% in this one. So in this scenario, you make 2% for your portfolio. You took a lot more risk though, and it's a lot less return. And then finally, if you're super unlucky and the worst possible thing happens, and you want to separate these maybe more widely, I don't know. This is literally surviving a double, another double, a third double. So I don't know, if Retti was $1, nobody shorted it at $1, right? So let's say you maybe got interested at $2. We really got interested at 4. So let's look at 4. So this is surviving a 4 to an 8 to a 16 to a 32, which is not what happened here. So this is 3 doubles. First double is here. The second double is here. And the third double is here. So if you got 3 doubles, you are now at 24% position. That's pretty disastrous, obviously. But you decide to go all in again. So this 24%, you're basically all in at this point. Again, not something I would necessarily recommend, but this part makes you 18%. And this part should, roughly break even. But let me see. Actually, you would lose money on this part. So you lose 50K in the first part. This guy, 100 turns to 200 to 400, back down to 100 would break even. And then the 200 to 400. So you would make 50. Okay, yeah, so you break even on that. And you'd sort of make 18% in, say, yeah, this is martingaling for sure, but the point is that you're leaving room to live, which is great. So depending on how you do it, let's say that took 6 months, you would make 39%. So the point of my story here, and this is sort of a tiger approach, is that as long as you're certain it's going to go down, and as long as you keep your sizing right, you should be able to survive. And in this scenario, we are literally doubling our position size after 3 doubles, and we still survive. You could also decide to start shorting it when it goes down, which is a popular strategy. Either way, the biggest mistakes in money management come from positions that are way too large. Yeah, so the lower you start with, the more room you have for error. And look, I'm not even talking about stop losses. I'm not even talking about, waiting till it peaks and then shorting it. Those are all really good strategies too. But at the very least, if your plan is I'm gonna fight this through to the end, you can't start with a huge position. Yeah, I mean, I'm not saying I know the perfect answer. All I'm saying is that if you pile into a short because it's the best short you ever heard, but it's super volatile, you should sort of expect the possibility that it can go up, it can double even twice, and if you can survive a 4x on a short, you should probably, you'll make money. But some people need to be able to survive a 10x or a 20x on a short. It all depends on what your objectives are. I do think you have to be fearless. I mean, I think if you're scared to make money, that's a problem. I do think you have to be willing to abort ship too. A good time to abort ship here was when like if I was a more risk-averse investor, which I'm obviously not, a good time to abort ship was when Microsoft said it was going to be the year of quantum. Then it was like, okay, Google's in here, but now Microsoft's making noise. Man, this is too. Let me wait. Let me wait. And again, that's hindsight. Hindsight, I'm George Soros, but that doesn't help me today. So, I think the thing Paul Tudor Jones said, and I'm not trying to glaze all these other traders. You got to find your own path that works for you. But Paul Tudor Jones says the mistake he sees almost every new trader make is their position size is too much. I knew a guy who worked for Steve Cohen a long time ago, early days of Steve Cohen, when there was only 50 or 100 people. Okay, and he had a 20-year track record. Okay, Q1, Q2, Q3, and Q4. And this is his track record. And this was the year. Okay? Now, people have monthly track records and stuff like that. But the way he sort of liked to present his track record was like this. Right? So let's say I made 5% this quarter. I made 3% this quarter. I made 6% this quarter. I made 4% this quarter. I was up 20% this year. You get it? Okay. And this guy is, he's well known in the hedge fund circles. He's not too well known outside of him. He's been retired since he was 40. I worked out at this guy's office briefly. He was a friend. We sort of just don't talk anymore. No bad reason. I'm sure he would have no problem hearing from me today. He's a good enough guy. No bad blood. Nothing bad happened. We just sort of grew apart. So anyway, the guy, here's the thing about this guy's track record, right? So this is his 20-year track record. Every single quarter for 20 years was positive. Every single quarter. 20 years. Never had a down quarter. And there were plenty of recessions and depressions and things like that in that quarter. So you might say, okay, sure, he's a great investor. There's a lot of those, right? But here's the thing about this that's special. Obviously, the track record itself is special. It's pretty rare. Very rare to have that kind of track record. There are other people that have that track record. But here's what's interesting about this guy. He never had leverage once. And this was really weird. I worked at his office, so I kind of got to look at his portfolio sometimes and talk to him about this stuff. He always had half of his portfolio at least in cash. And in fact, he often had 70% of his portfolio in cash. So there's many ways to skin the cat. When a lot of people take leverage, they're thinking in their head, well, I need to do this because I need to come up. My account's X dollars and I want it to be 2X dollars. Well, of course we all want that. But the problem is, as you make mistakes, those mistakes will be magnified. This guy, no, he wasn't short. He was pretty neutral. This guy made a trade. He was sure he was right. On a short-term basis, on a long-term, whatever. He was mostly a short-term trader. Exactly, Kamala's got it. He only swung at perfect pitches. And if you only swing at perfect pitches, or what you think are perfect pitches, you will basically, the ones you get wrong, because you will get them wrong anyway, right? You're just going to get stuff wrong if you're a trader. Buffett doesn't necessarily get a lot of stuff wrong, but Buffett makes two investments a year. So it's easy for Buffett. But this guy's making, 100 trades a day. Maybe 30 to 100 trades a day. And, Kramer was a lot like this too. Kramer would buy a stock in the morning, and by the afternoon, if anything felt off, he would just sell it and just say, I'm out, I'm too nervous. He couldn't take any amount of money as a loss, basically. Any position was not working for him, he's out. I have a very different strategy. I'm more like an Appaloosa or a Tiger where I'll take all the pain in the world, bring it on. I don't care. And that strategy works too. But the question is, if your strategy isn't working for you, think about a different strategy. Think about, okay, let me take much smaller positions. Let me see if I can grow my account that way. Because at the end of the day, as long as you're growing your account, that's what matters. You just want to avoid shrinking your account. The rate of compound return will take care of everything else, the law of compound returns. But if you're shrinking your account, you can't do much. You can't become rich, that's for sure. So I think that, you got to find a way to grow your account. And if you've tried and tried and tried again, taking these big swings, trying to be a hero, and it's not working, try smaller swings and try strategy where you automatically, any position costs you whatever the number is for you. It could be $100, it could be $1,000, it could be $1 million. Whatever number makes sense for you, you just say, I'm out at this amount. I don't care what it is. Now, of course, if you have complex positions like hedges and things like that, you probably want to think about how to make this method work for you, including some of those things. You make adjustments. You make it work for you the way that makes sense, but you don't want to be sitting there, I guess, frustrated and then repeating the same thing that got you frustrated in the first place. That's, the definition of insanity, I guess, according to Einstein or somebody else. You keep repeating the same thing and you hope that that's going to change somehow, change your outcome. You're going to have the same outcomes. Now, the funny thing is, in different markets, different strategies will have different outcomes. So you might say, well, I used to do this and sometimes it worked. Well, sure. Mean reversion works really well in certain markets. Trend following works really well in some other markets. And in many other little things like that. So, I think that to find a system that works well all the time is very hard. Very, very hard to do. And part of it is mastering your own psychology. I mean, what system are you compatible with psychologically? But I think, maybe the number one thing about any system is that you just have to be comfortable with its rules. What you probably don't want to do is say, well, I'm a trader who will fight a position, and I'll double down as it goes up. But then you don't want to be the guy that then starts scalping for quick profits. You sort of have to be consistent. You can't take one part of a strategy and then decide that you're going to take something that's diametrically different for your strategy from Monday to Tuesday. You have to be really consistent and say, this is how I do battle with the market. I'm a trader that, has really tight stop losses, and I try to get as much gain as I can, but I always obey the stop loss. That's my thing. Or you could say a strategy like mine, which is I try to find my true north, my lodestar. I have my opinion about what a company's worth, where it's going to end up, and that's the North Star I follow. I don't care what else happens. The market's just noise. It's nonsense. My lodestar, my true north is what matters. But then you can't mix them up and say, well, my true north matters, but when it's up 5%, I get it. That doesn't make any sense. You'll never make it. It'll sort of always be, the market will always be chopping you up if you act that way. Every 5% in the stock is going to make you nervous. It's going to drive you crazy. And it's not going to work. So you really have to find your strategy that makes sense. Other people say, I need an edge. I need an informational edge. Okay, well, you're playing with fire with that one. But that method does work if you can get informational edge. So, you don't need insider info per se, but, you get close to the line. And, it's a game some people want to play. There's other people that say, I just want arbitrage. I don't think, stoicism is good for some people, but for other people, you might want to be so the guy I was talking about with the perfect track record, this guy was well known for being a very loud, very angry screamer on the trading desk. He was a perfectly nice guy outside of the trading desk. But this guy also worked for Michael Steinhardt, who's the godfather of screaming at people. And, basically, Steinhardt would yell at people. Kramer worked out of Steinhardt's office for a little while. Steinhardt was like the god of hedge funds back then. And so Steinhardt was one of the pillars of hedge funds. And so, anyway, Steinhardt would just start screaming at the top of his lungs at anybody and anyone around for a small loss. And I think the guy's super rich, right? The reason for screaming is not because he's mad at losing the money, even though it might seem like it. I think the reason for screaming was just to get the loss internalized as a mistake and cut the mistake and move on. Because if you start to accept the losses as a trader, you're basically cooked. And that's kind of I think the philosophy that this guy I'm mentioning, I won't say his name, as I respect his privacy, he's a pretty private guy. Steinhardt especially, and then also Kramer and many others, that was their strat, was to sort of lose their minds, screaming, yelling, breaking things, just to reinforce that discipline, I think, that I can't lose money. I can't lose money in any trade. It's terrible when I lose money on any trade. So if I'm up 30% for the year, a good way to be up 10% for the year is to start accepting losses. And I accept losses, but that's because that's my strategy, is that I'm willing to accept losses in the short run for gains in the long run. That's not a trader strategy. A trader strategy is I'm never going to take losses. I'm never going to have a drawdown, because I'm always going to be out. Now, a trader has to take some amount of pain, but a trader, the way I'm describing it, a Steinhardt-like trader, is not willing to take much pain. They're not willing to have a month where they're down more than 1 or 2%. I'm willing to take almost all the pain until I get proven right. And again, that's a very Tiger perspective, but Tiger had its pros and cons too. So, it all depends on your strategy. A lot of traders will have a hard time making a 50% return for the year because they're scalping smaller moves. They're taking less risk, really. Guys like me don't have that big of a problem, but we also might have a year where we're down 20, 30, 40%. So it's all in you. It's all in you trying to figure out what you want to do, where you want to be, how you want to do it. And I think the number one rule is stick to your strategy. Once you start fucking around and doing things inconsistent with your strategy, you have a problem. Now, listen, if you are shorting NVIDIA and Palantir and you're buying cassava, you're not going to make money no matter what your strategy is, right? So you still have to have alpha. You still have to be right. I mean, that's never going to change. So skill makes things a lot easier. And I think that's the other thing people don't do that you may want to do is do simulations and backtests. Now that automatically scares people. Say, I don't know how to do that. Well, you can actually do it with Excel without doing any fancy work. Your work can get fancier and fancier as you sort of learn how to do this. But you could do it like this. Say, all right, how many trading days are there in a year? There's 250 trading days in a year. How many trades do you make per day? Let's say you make 50 trades a day. You're going to make 12,500 trades in a year. Okay? Trade journals are great. Yeah. No, trade journals are great. The only problem with the trade journal is how much time it takes to maintain. But other than that, I would recommend them. Well, I just got a lot of positions I have to manage here. Just give me a minute while I try to figure out how to do that. Okay, probably need to buy some of this. Hold on. So this isn't a back test. This is more of a simulation or a calculation, but you can make this as sophisticated as you want or as unsophisticated as you want. But you probably can get most of the point, without much of hard work. And one of the best things you can do is look at your trading results for the year, any given year, and tax time is a good time to do that anyway. All right, so let's say this is it, 12,500 trades a year. There's a lot of ways to do this, but one fun way to sort of do it is say, okay, I'm going to do winners, washes, and losses. Okay, so let's assume that you have, well, we can even make some assumptions here. 35% are going to be winners. 30% are going to be losers. 30% are going to be a wash. Okay. I mean, if you're market neutral, I'm not sure there's any given year you could say everybody made money or not, but regardless. Say, what's the average size of my trade? Well, I don't know. Let's say my account size is $1 million. And the average size of my trade is 2%. My average trade is $20,000. Dollar size of trade. And then you could also have, okay, win rate. And my win rate is 50 basis points. Or my win amount or something, because we know what the win rate is. And so number of win trades is this. And it's kind of amazing, right? Like you with a $1 million account, you may make $87 million of trades. 20,000 bucks, 4,000 trades. Yeah, sounds right. Dollars in wins. And how much did you make? $400,000. Now, if you only had wins, you'd have a nice 40% return. The washes are, you don't even have to do them, I don't think, right? Give or take. And now the loss rate, well, same concept here. And these are losers independent of longs or shorts. So you lost $70 million. You had $75 million in losing trades. And you lost $375K. And you made 6% for the year. Right? So if you're okay with this, this is like an implicit DCF. This is what you have to do. And you can see that you say, well, this isn't that good. This is not what I want. This is not risky enough. I don't want to make 6%, right? So now you have to decide, well, what are you going to change? What happens if you do 100 trades a day? Well, now your profit doubled. What happens if you do 150 trades or 300 trades a day? Well, your profit's going up quite a lot. Okay. Well, you say, I'm only human. I can do 100 trades a day. All right, well, something else has to change if you want to be a big winner. Okay, you could take more risk, make double the size of your trades. Now you're up 25% for the year. Okay, you squeeze out some more wins, make this 36 instead of 29, your profits are even higher. Obviously these things will impinge on each other. Make a lot of stop losses for the losses and let the winners ride. Now you're really killing it, if you can do that. You triple your money, but it's very, very hard to do. Look at the impact even 10 basis points has. 5 basis points makes a huge difference. So doing this just lets you kind of have a sense for okay, what do I actually need to accomplish in my trading? Do I need to trade more? Do I need to trade less? Do I need to make more when I make? Do I need to hold my positions longer? All this stuff. Yeah, of course you can't have a job and do this at the same time. No, you should drive a truck and trade your money at the same time. Work at McDonald's and go trade at the same time. I'm talking about professional investing, not you in your spare time in your 401k, buddy. I'm talking about having a fund or something serious. Yeah, this is all high tax strategies, but obviously if you have a fund, you're going to have some tax-free investors and stuff like that. No, I don't really care about Powell. I make money by, like I said, focusing on what I believe is the fair value for any given company. And I trade according to that, and I'll let the rest of the world bother me. And I make trade-offs. My trade-off is I get more time to focus on what I'm good at. In my opinion, I could ignore the randomness of macroeconomics and politics and all that stuff. It doesn't fucking matter to my portfolio, really. Because I like to have longs, I like to have shorts, and I don't need to worry about something I'm not really good at. Who's really good at deciding what's going to happen in the macro? That's not me. Now, if you're really good at that and you care about it, yeah, watch Powell. But if you're a fundamental investor, what are you doing? You're wasting your time. You could be looking at a new stock, a new potential company with serious alpha, new product launch, something. And yeah, that your portfolio is going to be affected by the macro, but it's your job to neutralize that. If you only have shorts, buy some SPY. If you only have longs, short some SPY. You can hedge out the beta. I never did Value Investor Club, sorry. Amazon is calling out. Yeah, it's Quantum Wars. Where's Amazon doing this call out? Everyone's calling out Microsoft. They're haters, man. They can't deal with the topological qubits, the Majorana state of matter. They just, no fucking way that works. If that works, we're all dead. Satya's like, it works. It works, bitches. It's all over for you, bitches. It's over for you, hoes. That's Dasha's favorite thing to say. It's over for you, hoes. Oh, I'm not subscribing to fucking this bullshit. BS and hype. Amazon execs. Well, first of all, Amazon's not really known to be a qubit quantum computing expert. Amazon doesn't have too much respect in that area yet. Now, IBM is probably saying it too. Vive is Viva, CRM company. Kami, of course, yeah. You buy a put option for $3 and sell it for $20. You make a lot. I mean, this account went from 100 grand to 2.4 million. Just shorting, basically. So shorting can be very profitable. Not really 901. It's a big difference between running an API and running a successful quantum computer. Listen, even like I was saying earlier, I think I was talking about this in Godel, most professionals are too scared to short. Even the most fearless short sellers I know are scared. I love that they say this. Tech companies have been working on quantum computing for years. The hope is to one day create machines that enable significant strides in area like drug discovery. Hold the fuck on. Did anybody ever ask somebody, do you guys in drug discovery need this? Because I have a comment. I think I might be having internet issues. To me, that, like, or chemical compound creation. Who ever asked do the quantum people ever talk to the drug people? We don't need this. No, the article is why Rigetti dropped. He said Microsoft's technological achievements are impressive but insignificant compared to what is needed to create a useful quantum computer. Scott Aronson has not been accepted. This paper has not been accepted by peer review. Oh, here's Amazon. Quantum computers may not be commercially viable for 10 to 20 years. Ooh. Ooh. Amazon shitting on the industry. Rigetti doesn't have 500 million. Look at the balance sheet. What 500 million? You know how to read balance sheet? Here, let me help you out. This is how we do it. We go to RGTI, equity, CF, enter. Okay, they didn't file their 10Q yet, but we have this thing. We're going to open this. We're going to read it. We're going to go to the balance sheet. Oh, okay, here it is. This is the balance sheet. Let me help you out. Cash, 67 million. You see that? Cash. Investments, that's 124. What does that add up to? 191? 192? Okay, and there's some more cash here. It looks like it's 217 total. Okay. 217 million. It's going to need a lot more money than that to get to quantum computing. Remember, about half of that money goes to overhead. It's the cost of being a publicly traded company. I know all about that. That's at least 20, 30 million a year. And they're only spending 60 a year. So really, they're spending 30 million a year on quantum computing. Think about that. That's not a lot of money to crack the hardest problem known to humanity. You think you could do that for 30 million a year? That's it? Man, get the fuck out of here. Bullshit. Well, I have an ATM, but they have to hit the ATM. Everybody has an ATM. Doesn't mean it's money in your... The ability to sell your stock to your investors doesn't mean you have that cash. It's not on your balance sheet yet. You might be able to rinse some people, definitely. I mean, they're a publicly traded company. Basically, they can keep selling stock to shareholders forever. They did at $1.70 recently, or $1.50. I forgot what it was. They sold a bunch of stock. They looked at the stock at $1 something. They were like, yeah, let's sell this shit. We need this cash. Capricorn. Didn't their drug fail? Big catalysts on the horizon. Come on, man. Come on, man. Oh, this could be a good short. could be a real good short. I could hit this from the back. Thank you. See, it's people like Code on Fleek that give me some of my best ideas. That's why I love this community we're building. I should pay some of y'all. For real, for real. I might start paying. Fuck it. I might start paying. If you type some good shit in Godel, I might start giving out some coupons, rebates. I might start giving you creator, you know, like a creator. You're like the Mr. Beast of stocks. You know what I mean? You deserve some paper for that. Thank you, Mr. Beast. Little stimmy. Yeah. Little stimmy stem. I want that stimmy. If you're the Joe Springer of stocks, but you're consistent, you still get a stimmy. I subscribe to Joe Springer. I'm waiting for the next big call, baby. He's shy. He doesn't want to put out something. Next big Springer call, I'm fucking all in. You're a consistent bag holder who's like very good at being bad. That's worth more than the guy who's good at being good. We keep paying you. No, our options product isn't where it needs to be. We hired a guy just to do options, who's a master programmer. And we have I repurposed another guy to just focus on options. So we will have a better options product than live vol. But it's going to take us a few months at least. I mean, can't build that overnight. We have options, but it's just not. It's not that competitive, quite frankly. But we will. Well, I took somebody off one team and put them on the options team. That's what repurposing is. You got a problem? I hope you don't have a problem. I had dinner with a guy last night, this big biotech guy, and he said he doesn't believe NACTREV has any money. Because, I mean, he's acting too much like a baggie to have real money. I mean, ComWest, the true answer to that is hopefully never, right? I mean, if you're really so rich you can throw 70 in a biotech that goes to zero, you maybe have $1 million or $2 million in some hedge funds, biotech hedge funds, and you ask them for advice. Hey, man, you know, you guys have been doing good for me, but you ever heard of this cassava? And they, oh, we're short that shit. Oh, okay, bud, thanks. There's no after Godel for me, man. I'm gonna make billions of dollars making the best financial software company the world's ever seen. Hopefully, that's the goal. It's not easy. There's a lot of financial software companies. There's a lot of competition. It's a huge space. Believe it or not, it's close to $1 trillion space. It's one of the biggest spaces in software. People don't even know how big it is. Nobody wants to compete in it because the perception is that it's hard to compete in it. But yeah, Braden. I mean, I don't know about 500K, but you got 5 million in a hedge fund, biotech hedge fund. I mean, they'll give you an opinion if you run. You can't bother them every day for the rest of your life, but if you're putting 70 mil in it, they'll just talk to you in general. Yeah, Joshua, a very small player, but yeah. Most of the money in financial software is business to business. I mean, almost all of it. So we're gonna stick to that. I mean, I want it all. I want to help all investors, but we have an investor deck. I mean, we show that to institutional investors and high net worth people. Millennium minimum, it's pretty big. I want to say like 100 million. But you can get into Millennium through some other feeders and stuff like that. Yeah, I mean, I'll go to medium net worth investors if they don't waste my time. But we're scaling pretty fast. I think Quanta is, Quanta wants to be, well, look, Quanta's not really putting a lot of money to work, first of all, right? So I'd point that out. Anyway. Let me focus. But yeah, Capricorn sounds like a good one to look at. Let me put that on my screen here. Capper. Oh, wow. We're gonna have fun with this one. If we do this, we're gonna call it the Capper. It's all cap. Literally, cap is in the ticker. Why would you buy something with the ticker is cap? And then we have INMB, which is like true fraud. Bladder cancer is a big market. Discount rates, I mean, determining the discount rate is the core function of finance. That is the whole point of finance. Like literally the entire field boils down to that question. Noah, the local crackhead, is back. Queen's finest. It's I mean, Noah's crazy. He shows up every now and then, flipping out. If you want to ban him, that's fine. I think he's kind of funny. I mean, I rep all the boroughs except Staten Island and Bronx. I've never lived in those two, but Queens, Brooklyn, Manhattan, that's New York. Bronx to me doesn't. It's New York. It's a different vibe. Staten Island never felt like New York to me. And of course, Manhattan and Brooklyn are 100% New York. Never lived anywhere else. Well, we'll see. I'll be making some announcements concerning real estate soon. Yeah, Queens is great. I mean, Queens is a lower pressure vibe than Manhattan. Manhattan's really active. I think Bitcoin's going to drop. Yeah, upstate New York is not. Yeah, SBF wouldn't survive in the Bronx too long. And it's not because people in the Bronx are mean or something. They're not. New Yorkers are much nicer than people think. It's that his mouth gets him into a lot of trouble. He's going to see some guys on the street corner in hoodies. He's going to be like, "What are you guys doing?" They're going to be like, "We're doing business." Who the fuck are you? He's like, "Oh, I'm a business person. Can I do business too?" Yeah, so I don't know if I'm allowed to say this or not, but I helped Tucker. I was planning with Tucker how to get this podcast off. I was giving him advice on how to navigate the jail system. I think the Biden administration really didn't want him doing this podcast. They're very, very, very. The BOP is not friendly, and I don't think they were going to let Tucker interview Sam. But now that Trump is the president, shit. 1, 2, 3. Exactly. I don't know much about the Dominion thing. I just like Tucker as a person, man. I consider him a friend first and foremost. You know, I don't worry about his business, his media, what he's doing. Like that's not my as a friend, that's not what a friend does. You know, a friend is a friend. Is not nosy all up in your business, what's your business doing, this and that. Barely talk about that. I don't think Tucker's an idiot. He thinks differently about things, that's for sure. I don't agree with him on everything, but he's not stupid. I mean, I think he is. Yeah, Newsom doing a podcast is kind of a top for podcasts. Oh, he's definitely a little bit weird. You know, he would admit that. He's really funny and he's really good natured. You know, what you look for in a friend is loyalty, empathy, sympathy, camaraderie, you know, and he was one of the few people to be on my side at a time when most people didn't want to be on my side. Oh, we talk about politics, we talk about technology, we talk about all kinds of stuff. I mean, trust. But we also have, I mean, one of the things about Tucker is we have a lot of mutual friends um, in that sort of sphere of influence and world. And, I think we all want a better America. Um, all the people that are showing up, whether it's Vivek, who I did quite a lot of business with, or or some of the other big VC guys or whatever, all these people, we all want a better America. We all want a world that's not run by AOC, quite frankly, where we can do business and make America better at the same time. But that's not going to work. That can't work if DEI is the focus. That can't work if you know, you're scared of your own shadow and there's no way for you to run your business without thinking about equality first and stuff like that. Profits first. Okay? I've never been afraid to say that, and I never will be afraid to say that. I said it in front of Congress, implicitly, and I'll say it in front of anybody. It'll never ever be anything but profit first in a business. And all these chickens are like, no, well, we have to take care of all stakeholders. Yeah, the stakeholder is the shareholder. That's the stakeholder. Period, the end. You got a problem? Change the laws, change the game, but that's capitalism. Profit first, shareholders first. That's it. You want to fuck the country up, go do something different. That's cool. I'm not interested in fucking the country up. China, a well-oiled machine, man. They want to crush us. China's determined to be bigger and better than America. We're not going to let them get ahead by being DEI psyoped into equality, social justice, all these soy boy shit. By the way, it's not the oppressed that cares about this stuff. The oppressed is grinding too. They want to win. It's this weird class of like white privileged people that are being psyoped into this DEI stuff because they're the ones with the guilt. They have the guilt. I have no guilt about America's history. I come from Albania. We were oppressed there too. We were taken over by the Ottomans. And the guilt of America, we have a lot of original sin in America. There's no doubt about that. Slavery, we've got Civil War, we've got all kinds of shit that America's done in the past. It's not great. Okay, fine. But the average trust fund kid who gets an MFA at, Tufts or something, that kid's nervous about why does he have a better life than the next black kid or the next Hispanic kid or whatever. And he wants DEI. And his girlfriend, Karen, wants DEI too. Now, I also have sex with Karen every week, but regardless, I'm kidding, what it's worth. But it used to be true. But in any event, that sort of attitude is just something that is basically just looking backwards in time and feeling guilty about something you didn't do, and feeling guilty about current conditions, which is also something you didn't do. And it's just not a yeah, people do disagree, Anthony. Huge amounts of people disagree. We put people in jail over this. The whole media from 2000 to 2015 was focused on this. It's a mixture of guilt and then that guilt reverbing as signaling. But there are people that deep down have these beliefs. There's no doubt about it. That, this is a fundamentally racist country and, so forth. And yeah, you could argue that it's manipulation by other nations and things like that, but there are a lot of places where diversity became the only hiring criteria. Yeah, Asians had to take it on the chin quite a bit too. Asians, hardest working, smartest, people get, bashed for being too good. So it's a very funny kind of predicament where it's like, well, what we really are worrying about here isn't racial, it's much more mediocrity. We're trying to level up mediocrity. And the problem with that is that if we lived in utopia, it wouldn't be a problem. But we don't live in utopia. We live in a world where China's. Look what China tweeted the other day. There's like, you want a war of any kind, we're ready to go. Okay. It's good to be ahead. I'd rather be number one. I don't like the idea of being like we live in a country where we can get taken over by another country because they're stronger. They could bully us. I don't like that idea. I don't like the idea that, another country can like subject us to their will. So, I'm gonna work hard. I'm gonna do my thing. And if they put me in jail for that, they get mad at me for that, I'm not changing. Yeah, I think the market's crazy. I mean, David Einhorn, who I have beef with and I don't like, he's been writing in his letters that, market valuation just makes no sense. It's all fucked. It's all going, he doesn't want to own any stocks. Meanwhile, he owns a lot of stocks, so go figure. But I'm so bearish, it's insane. Especially after looking at Walmart and Costco at 40 times earnings with no growth. Any of you guys in Hezbollah? Any Hezbollah fans? How about ISIS? Anybody? No? Hamas? Hamas enjoyers? Anyone like Hamas? No? Hummus or Hamas? No, not hummus. Hamas. Buffering. Who gives a fuck about Powell? I have this really crummy old ass router. I can plug in some Ethernet, but if I plug in the Ethernet, I think I'm gonna get a weird vibe. So let me just see if this will work out. I think there's a chance Apple oven's a fraud, for sure. Yeah, it's sort of a stupid question. What I would study if I was going to college is, first of all, I'm not you, so it basically doesn't mean anything what I say. Second of all, I do study as if I'm still in college every day, so you never stop learning. What is Soros shorting the market? That's the dirty word now. You call somebody a globalist because they don't like tariffs. I know. That's what I mean. Do you hear AI.com is maybe going to go for 100 million bucks? Oh, Google will buy it, or OpenAI, or Microsoft, or AI.com. Could you imagine being the asshole that bought it for $8? Oh, the guy who owns it keeps pointing it to different different websites. So he keeps changing it to the different websites he wants them to buy it. Isn't that funny? Well, he hasn't sold it yet, so that's pretty funny, right? He's basically saying, look how much traffic you're gonna get. I know you want it. Oh, I switched it over. Now it's going to OpenAI. Now it's going to Anthropic. I bet you one of the dumber companies like Anthropic might do it. I don't know if they're dumb, by the way, but like Salesforce.com, I think. We need to compete in AI. Yeah, it's hard to know what domain you should buy. It's pretty tough to figure that out. But like sometimes you can buy a domain that the company doesn't have. Like a good example would be Majorana.com. It should be owned by Microsoft. It ain't owned by anybody. Owned by some Chinese wholesale something or other. Right? Yeah, I never heard of DHK. What is that? What the hell is that? Never heard of it, no. Yeah, Chuck's probably done. Yeah, Adam, yeah. We are going to make that for you guys. Key is it has to work. But yeah, that's the game plan. I don't know, Mr. Ben. I'll try to get that working for you, all right? Yeah, Luke, for now. But maybe getting some really good prices shortly, you know? Well, we're at seed round right now. It's 50K minimum. Pretty much getting close to 100K minimum for investors. We're not really dealing with pikers anymore. Sim, first of all, that's great. But yeah, just be careful with Claude. Mine filled some of my data with random data, which was really frustrating. I didn't want that random data. But no, I mean, I think AI is going to help all of us make better trading tools. And I'm going to make them for you so you don't have to lift a finger. But if you want to go ham and try to do it yourself, you can. I'm going to give you guys algorithms you could just plug your account into and just print money. Let's go. Money not guaranteed. You're going to have huge returns. Huge returns not guaranteed. You're going to have no drawdowns. No drawdowns not guaranteed. You will have drawdowns. Who the hell is that guy anyway? I'm your lawyer. You know, my last lawyer went to jail, right? I gotta go. No, one of my lawyers, outside counsel was indicted with me, which is really a shame. And I'm going to write some letters and see if I can get him a pardon because he really, really, just really didn't deserve it. You will never be a baggy again. You'll probably be a baggy. Baggy advice not guaranteed. Stop holding the bag on some stock you read about on Reddit. Start being smart. You are an idiot. You will never be smart. Well, I'm in the Retti. I'm in the Retti subreddit. That shit is great. It's not as bagalicious as I would like. Cassava was some baggy shit. That was bagalicious. I hope we get another one. I know we'll get another one because that's just how it is, right? I don't know if I've seen so many on Reddit, but like I've seen some bag holders in my time, man. Mankind was a big one. A lot of these were message boards before Reddit, like Yahoo Finance had a lot of these. Even Investors Hub was a big one. I was short these stocks like Nvidia, which was called Neoprobe. These are really like self-help groups. But like, they're self-destruction groups more than self-help. Oh, Huma must have some bag holders. Self-bagging. Okay, so we don't have a model for Saudi Aramco, Berkshire Hathaway. We just did make one for Walmart. We don't have one for MasterCard. I think we should do one for MasterCard. It's a fascinating business, actually. We did make one for Costco yesterday. We don't have one for Exxon. And we don't have one for Procter. So Procter & Gamble, MasterCard, I mean LVMH and Hermes could be interesting too. Coca-Cola and T-Mobile. Let me do a straw poll. Do this real quick. Okay, so we got MasterCard, Procter & Gamble. We got a foreign stock, which is LVMH. We got another foreign stock, Hermes, T-Mobile and Coke. Those are my choices. All right, there's the link to vote. Let's see your votes. Okay, we got LVMH. We got MasterCard. LVMH. Is there a bunch of Euro trash in here? Oh man, LVMH versus MasterCard. Some Coca-Cola fans. Nobody gives a shit about Hermes. All right, I'll do both. I'll do MasterCard, then I'll do LVMH. I remember when MasterCard came public, every Tiger Cup was in it. Shit went up 50x. Crazy. All right, $500 stock. There's some rich people in Europe. It's not all poors. It's a couple of rich people. Okay, MasterCard's 10K just came out with their Q4 results. Nah, there's some rich-ass Europeans. But, things are changing. Europe's got to get its act together. That's no doubt about that. Okay. Let's see here. Yeah, all of the Retti calls I bought are blue, green. Deep, deep green. But those are my hedges against my massive short position. Short 300,000 shares of Retti. I'm trying to get more.
All right, so what's up with MasterCard? We've got revenue, earnings, and stuff like that we'll look at later. But the biggest thing we're interested in is some of these other metrics. So there's gross dollar volume, which was 9.8 trillion. Cross-border volume and switched transactions. Now, I don't know what that means, but these are all numbers in billions, which is crazy. So in terms of gross dollar volume, consumer credit cards were 34, so 3 trillion. Consumer debit, prepaid, 4.8 trillion. And then commercial credit debit was 1 trillion. Okay. Cards. I'm just going to add up all the cards. 2 billion cards. 2 billion pieces of plastic. I recommend you print this out and read it. Wish I had the time to do that myself. Who's the CEO? Bizarre. Oh, I see. It's over here. Got it. So what the hell's going on here? Okay, Michael Miebach, 57. He was the president of Middle East and Africa for 5 years. Okay, so revenue 28 billion. Last year 25 billion. Year before that 22 billion. So kind of crazy growth for a somewhat boring company. I mean, 12-13% revenue growth is pretty solid earnings growth. Shares outstanding 927. So market cap 500 billion, making it, there's got to be a top 20 in the world, right? 17th biggest company in the world. 17. You can email me serious inquiries only, martin@dl.software. Martin at dl.software. There you go. Don't waste my time, and I won't waste yours. A lot of people like to waste time, man. I don't waste time. You want to have a conversation? Go call your grandma. I'm not interested. You want to do real ass, good ass business? Then we can talk. All right. That was Baby CEO. I used to talk to this guy, Baby CEO, who's like this little kid in the hood who was really crazy. So this is wild, the margins. It would be funny if Retti bought strategy stock and strategy stock was buying Bitcoin. It'd be like such a funny doom loop of leverage. So MasterCard doesn't report cost of goods. So they just have this massive operating margin. Like, yeah, we just take this toll, man. We take this $17 billion toll every year. That's it. Baby CEO is hilarious. Well, I used to talk to him. He got killed. I used to talk to him when he was smaller. He died at 20. But he was doing gangbanging shit much younger. Some of the stuff was funny. Yeah, there he is. And then, I don't know if you remember the other guy, Lil Mouse. He was old in this. He was already OG. There was some, I remember when he was like 8. Like 8 years old. He had all these shooters working for him. Is this the guy? He's smoking that loud. Oh, this is the guy. Wait, no, this is still the guy. I think he's alive. Oh, no, he's dead. Fuck. Yeah, no, this is the dude. Fuck. Yes, this is it. I can't believe the DM is still here from 2016 when... What's up? I said, hit me up. DM me. And he goes, what's up? You gotta love this. What's up? What kind of business? I said, hit me up. We do some business. So what kind of business? A good ass business. We both stack up. Oh no. See, you should have taken me up on that. Still be alive. I would have taken this guy to the top. But he got killed in the process. It's a great business model. Here's the crazy shit: is that look at these tweets. N-words be growing up spoiled as hell, then want to turn to trap N-words. Boy, yo mama, a good job. Okay. Now, he's older at this point. See, the problem is you talk that, watch your trap, watch your bitch, my young N-word gone be lit. You say that stuff, somebody's got to take that seriously. They don't want to hear that. Trying to keep it PG-13.